No matter where you lived over the last 12 months, you thought the real estate market was going to crash. But guess what? It's behind us. You want to know why? If you thought real estate prices were going to crash in 2023, guess what? You were right. But it didn't last long, and now it's behind us. You see, you were probably spending a lot of time looking at headlines about the pending recession, about the real estate market about to crash, about how they are trying to compare this real estate market to the debacle of 2008. But those are apples and oranges, and that was just a bad idea. So to understand where the real estate market is heading, you need to understand two words: supply and demand. In this video, I'm going to show you more data points that will show you exactly how strong this real estate market, and it's going to be like that for a few years. Hi, this is John Whelan, Mr. Downtown Delray. If this is your first time to my channel, do me a favor, hit the subscribe button and then hit that bell so you're notified every time a new video drops. Today, we're getting into a lot of information. Let's get started. To start, I want to give you just a data dump of information about demand and how the real estate market strength is, talking about equity and what's going on with home ownership. Take a look at this first chart. This is a chart about the home equity in the United States today is over $28 trillion. If you look back to 2008, that's about triple the amount of what it was back then. That is what I call a lot of equity and pent-up demand where people have not spent their money and their equity yet. The next thing I want to talk about is 39% of homeowners today own their property free and clear. They don't have any mortgage. What does that mean? Well, the headlines for the last 2 or 3 years has been there's more and more cash buyers coming out of the Northeast states. They're moving to places like Florida. California money is taking their equity and moving it to Texas. So their money is going further and they don't need to get mortgages. So a high percentage of home ownership today is what? Free and clear of mortgage. They own it outright. Job growth is strong. The economy is good. I mean, there's just a lot of pent-up equity going on in the market right now. So on top of that high percentage of people that own their property free and clear, 29% of homeowners today own 50% or more equity in their house. Let's take a look at the reason why. On average, historically, home ownership usually lasts between 7 and 9 years. If that's the case, that takes us back to about what, 2014, 2016? Well, today's market, because of the pandemic, people had to stay in their houses longer, so the average home ownership lifestyle these days is between 9 and 12 years. Well, that takes us back to what? 2011 to 2014. That's a long period of time when people were buying homes a lot cheaper back then, owning it for a lot longer, and so guess what? They built up a ton of equity, 50% or more, 29% of people have that. That shows one thing. Over the last 12 years, real estate prices have done one thing, go up, and that has built a cushion for people and given them a lot more equity in their property. Now let's take a look at how long it takes to sell a property. So July of 2022 was the zenith of the market. That was when it took the lowest amount almost in history to sell a house at an average of 14 days in the US. Then over the next 6 months to the end of the year, it more than doubled to 34 days. Well, guess what's happened this year and since January? It's already back down by 50%. If you wait just a few minutes, I'll show you exactly what's happening here in South Florida that just makes your mind numb. The next thing is, check this out. There are 3 million households in the United States that have earned income of more than $150,000 a year. And guess what those people are doing? They're renting. That is massive amount of demand just sitting there waiting for things to change. And guess what? The United States is short by about 4 million homes. So yeah, that's a lot of pent-up demand followed with a lot of cash behind it. But it gets even better. Check this out. So right now in the middle of 2023, mortgage rates just went over 7%. Ouch. But here's the thing. Most of the experts say inflation is now tamed, it's under control, and it's going to continue falling and get in line. So let's take a look at these two charts. The first one is a simple view of the past few years of inflation. As you can see, it was low, it went up to about 7.1% and came crashing back. This next chart is the seasonality effect. Look at that. inflation was low. It went up like Mount Everest up to 9%, 9.1%, and now it has crashed down into the 4% range. So all the fear of 2022 and inflation is now almost what? It's kind of behind us. And they're saying that there's a lag effect in interest rates. Interest rates are not directly correlated to inflation, but they have for the last few years gone in lockstep and followed each other. So if inflation comes down like it is today, the end of this year might see mortgage rates go from 7 to 6 or possibly even lower. And if that happens, this real estate market is off to the races. So now I want to pivot from the national news to more of the Florida, South Florida real estate market and kind of give you perspective. So 2011 was the bottom. That's when you could buy real estate here for about 30 to 35 cents on the dollar. Today, with real estate prices going up, it's more like $1.30 on the dollar. So you've kind of lost your buying power. Well, down below, I have an essay for you to take a look at. It shows how the real estate prices in Florida have been the highest price gain as a percentage in all the United States and how much it takes of your money to buy a house. Have a look at that. So if you think that prices in Florida are getting less bad, meaning they're showing signs of not falling much, then one would think, God, these real estate prices have got to fall here. But people are still migrating in droves from places like New York, New Jersey, Connecticut, Massachusetts. They're leaving high state income tax or just high tax base anyway and moving to Florida. They're getting away from the cold. They're moving south. They say that the business environment is a little bit stronger in Florida, whatever it is. Same with California. I'm dealing with over 6 customers right now who are in the process over the next 6 months who are relocating or just leaving California. Why? Because they can get a lot more for their money here in real estate, but also get away from high tax situations. A lot of entrepreneurs are throttled down with taxes in the state of California. Yes, they are migrating and moving here. And this trend, guess what? Ain't stopping. Now, with all those people coming down to Florida, I want to switch and talk about supply. So to start, every Wednesday, I write a weekly e-letter to my database. If you would like to be a part of that, down below is the link. Just fill in your contact information. I'll put you into my database. I won't contact you unless you would like to, but you might find the information useful. So I write in there about supply and what inventory looks like. So 4 years ago, there was 54,000 properties for sale in South Florida. Then over the course of 2 years, it dropped by over 72% to 14,800. In 2022, it rose by over 100%. And guess what? Since January of this year, inventory is back down again. And 22 out of the last 24 weeks, inventory or supply has gone down. What does that mean when inventory goes down? Less properties for sale, prices stabilize or go up. Case in point, take a look at this chart, which is what I call the U effect, where prices were high, fell, and came back. This is the median list price of a home in South Florida. Look, a year ago, prices were $470,000. Then they fell 25% to $350,000. And now they're back up to $402,000. So you can see that there was a lot of fear when prices were coming down and people weren't acting on that. And guess what? Now the correction is over. The real estate prices did not crash any further. Real estate prices started to go up because what? Demand is high and supply is way down. Now for my final chart and data point, let's take a look at the average and median sales price for a property here in South Florida. Take a look. The right 3 columns are the year-to-date data, which clearly shows 2023 is ahead by 21% and 11% respectively. And the left 3 columns are June of 2023 versus June of 2022. The average sales price for this June is up just a bit, while the median price is down by just a couple points. And guess what? It's narrowing. That's just one more piece of information that I think is important to know. So what does all this mean for the national and here in South Florida real estate market? It's quite simple. Real estate needs to be broken down into supply and demand. Many people spend a lot of time looking at headlines about the commercial real estate debacle. Yeah, in San Francisco, I think they've got vacancy of 30, 40, 50%. Prices are crashing. Places like Boston, other places are getting the headlines, but those are apples. residential real estate are oranges. We need to focus on supply and demand in this market. Clearly, demand is up. Pent-up equity around the country is up. People have more money sitting there. There's a lot of job creation. There's a lot of demand and showing a good real estate market with a strong economy. So demand is high. At the same time, sellers don't want to sell. So inventory is down. Low inventory, high demand, one thing, real estate prices are going up. I don't see with all this evidence of any chance of a real estate market crash in the future. So if you like this information, please do me a favor, hit the subscribe button, the bell so you're notified every time a new video drop. Share this video with your friends. I'd love to hear from you. And if you are planning on relocating here to Florida, I have my free relocation guide down below. Click it. Let's get in touch for a cup of coffee.